Much for joining in, Gautam, Sandeep, as well as Sunil. Appreciate you joining in, giving us your comments. As we speak, though, the markets are down close to around 300 points odd, and now the 200 DMA is within around 70 points of going out there. But Nilesh Shah, MD and CEO of Envision Capital, joins us. Hi, Nilesh. Well, you're back in the studio. Markets, in fact, they've done a complete U-turn, though. I was just remembering a couple of these brave market lines. Munga's line. The big money is made not in buying or selling, but in waiting, right? I think...
We've been waiting all through January. Today is the 1st of February. And the texture isn't changing.
But I'll give you another data point. The last 5 years, the Nifty, in January, we had a down month. But last 5 years, we ended higher for the year. Optimistic, right? You wanted that. All right. Nilesh, but Nilesh, what do you do out here? Clearly, there is a bit of panic that's playing out here. But we were asking for a dip, right? Every market guest was saying, let's get a bit of a dip, and then you'll get it. What's your take? Since the dip has come about, where do you look to invest the money?
I think the current levels itself, I think, are kind of looking very attractive. I think the reason, of course, I think I've been hearing for the last 5 minutes that we're talking of money shifting from India to China. I don't think it's money shifting from India to China, because the foreigners have been selling in the last 15 months or so. If you look at it, the last year and a half, they have been selling. So it's not really a shift from India to China. I think it's more about a bit of collateral damage to the markets because a certain section of stocks are getting impacted, which leads to basically margin calls and unwinding and things of that kind. So I think that it's just one small section of the market which is probably impacting the broader market, which to me, I don't think is something which is an issue which should last long. It should probably be done with in a day or two in terms of the impact or whatever it is. And I think value is emerging right now. We've had a great budget. This is a budget which we all wanted. It's pretty much a 10 on 10 budget. So I think maybe a day or two, slightly maybe at these levels, slightly lower levels, but I think value is emerging now.
So you're saying the collateral damage due to the one issue that's plaguing the markets, the Adani Group, should play out in the next 1 or 2 days? No,
what I'm just saying is the impact of that.
The
impact of that cannot just go on and on and on. I think it's something which just has an impact. It's more sentimental. When you have a very large, kind of a section of the market which gets impacted, then it has some kind of an impact on rest of the market.
So taking that forward, perhaps we would have made a bottom now, today, tomorrow?
I think so. If we get to, if this pace continues, we should be at about 17,000 on the Nifty. Okay. If you really look at even in June, we probably made a low of 15,500 or so. So that, versus that 17,000, earnings are better, growth is holding up, inflation is lower. Maybe we are pretty close to the rate hiking cycle. If I look at all those macro headwinds which we had in June have receded now. I think in that context, maybe, whatever, sooner rather than later, I think we get into a very solid value zone.
But you don't see us going down to June lows of 15,300?
I can't rule it out. As they say, never say no in the markets. I can't rule it out. But at least I don't see a fundamental case for the markets to drift towards those levels.
Nilesh, the market is what it is. But when you speak with people privately, right, people do kind of acknowledge that what we've seen over the last couple of days, it may be a bit of a derating kind of a trigger because of what has gone on, right? I don't know if anyone will say it on camera, but people I've spoken to have kind of expressed that fear. So I just wanted to put that to you. You think that is an issue we should talk about, which will get discussed?
No, I don't think this is going to lead to any kind of derating for India. I don't think investors are investing into India for one group or for maybe 2 or 3 groups. I think people are investing into India for India's long-term prospects. And that, I don't think, has changed in any kind of a manner.
No one is saying that, it's much bigger. The growth story itself is much more secular.
I think there can be some bit of debate regarding valuations and, about relative valuations, saying China looking cheaper or Hong Kong looking cheaper. I think that debate probably is acceptable. But I don't think that, the event of recent times is going to lead to kind of a significant derating of India.
I was exactly coming to the valuation, because let's leave everything aside, because that's sort of the holy grail, right? And it is being said that the pace of upgrades has been slowing down this quarter as well.
Yes.
The interest rate bite perhaps is also beginning to sort of show up. And valuations might not be frothy.
Right.
But we've never been cheap and we aren't cheap, right? That's a universal norm that everybody agrees to. So in light of that reality, irrespective of what's happening with a certain corporate group, do you still think that this can be a good outlier year for the market?
Well, I think so. I mean, I really see no reason why, and the way growth stocks, they remain relatively expensive. I think India is a growth economy. It will remain at a premium to rest of the world. I just feel that this kind of a correction only creates opportunity for long-term investors. Long-term investors who are willing to come in, who found valuations probably not as favorable 6 months back, 12 months back, or 18 months back. I think sooner rather than later we'll find valuations to be now attractive or maybe even compelling from a 2 to 3 year kind of a perspective. And I think that's clearly where the opportunity is in the market.
Okay, let's get one of the biggest players in the stock market on the phone line. Siddhartha Mohanty is Managing Director at LIC India.